I wanted to say welcome. Leon and I are coming to you live today to talk to you about what to do when there's a stock or position in your portfolio that's causing your portfolio to suffer somewhat. And before we jump in, I personally want to say thank you to everyone who sent cards, fruit baskets, showed up at the house, drinks, cranberry juice. I mean, the list is very long. And so everybody, thank you for the checking on me, calling, the text. All of it was greatly appreciated. I know I didn't return every single phone call. I was very tired. So yeah, just want to say thank you to everybody who checked on me after I got out of the hospital. Everything's cool. I'm heading back to 100%. And we are going to talk to you all today about the what to do if there's a position or a stock in your portfolio that's causing your whole portfolio to suffer. However, I will say I am still somewhat tired. So Leon and I will keep today pretty short. So if you have questions, please post them now. We will answer them if my energy level does not seem through the roof like normal. I did just get out of the hospital. So Leon, you can tell them why we chose this topic while I do some housekeeping.
Yeah, so we're gonna say shout out to IE member Monteith. So inside the IA platform, members, it's kind of like a Facebook. It's kind of like a financial Facebook where we discuss all things financial, stocks, cryptocurrencies, bonds, what have you. And Monteith, I posted something about basically saying, just reminding members that hey, when the market is down, these are times you want to start buying, right? Like if you check your watch list, some of your stocks are down pretty big. Your stocks are on sale. And Monteith had a situation where one of his stocks was kind of hurting his portfolio. And so he posed a question saying, hey, what do you do in this situation when there's a stock that you like, but it's just kind of hurting your portfolio? And what I posed to him was, I asked him, if you're feeling that pain from that one stock, you're probably too big in the position. What I mean by that is you probably have too much money committed to that one position, or that position is very, very volatile, because it could be that maybe your position money wise isn't that big, but that stock is so volatile that it's moving your profit and loss statement all over the place because it's so volatile. So it's either one of two things: one, you're too big money wise, or two, it could be you're too big money wise and it's volatile, or you're not too big money wise and it's just a volatile stock. So his question was like, okay, what do I do? He posed a question saying, look, it doesn't make sense to, since the stock has been dropping, to then buy more, or to, pair his losses, maybe cut some of his loss now and to reduce the position. My answer to him was, it depends, right? It's subjective, right? If you're feeling pain in a position, like I said, one, you're either too big or the stock is too volatile. But the way to rectify that is up to you, right? So if you're cool with, okay, so me personally, if I'm too large in a position, my first instinct, even when it drops, is not to buy more, because again, we never know what the stock is going to do. I'm already feeling pain in this position, so for the stock to drop, yes, that will lower my break even, but at the same time, I'm increasing. I could be increasing that pain that I could be feeling. So for me, my initial instinct is not to increase the size. His question was increase the size or sell some off. But like I told him, I was like, it depends on your situation. It's very subjective, whatever you're comfortable with. If you want to cut some of your losses now and take a little bit of an L to reduce that size so that stock isn't, pummeling your account, so to speak, that's one thing you can do. Or, if this stock you believe in, you're holding it, 3 to 5 years or longer, it may not, it may be an option to actually buy more at a lower price to lower your break even.
Yeah, and so I just want one of the things we talk about a lot is know why you're buying the stock before you buy the stock. And so be it an ETF, a stock, or whatever it is in your portfolio, before you cryptocurrency, whatever, before you buy it, know what your goal is, understand your goal, understand what price you're trying to get in at, know your length of time, like Leon's saying. But overall, please don't play guesswork when you're buying stock, and don't buy based off of hype. Because oftentimes when we're buying based off of hype or something we read, when it does become like, volatile environment, the stock market is such, you can lose money in the stock market. You're not as committed to that security because you don't know it well enough. You haven't done research. You don't know what its propensity is in the marketplace to either come back from that dip or just to keep going lower. And also, this will go, Leon and I talk about this all the time. Are you using risk capital or money you actually need? Because if it's risk capital and you're thinking, oh, well, I can afford to lose it. I believed in the stock. I did my research up front. Most of those things lead towards it's probably a buying opportunity. And the reason why I say that is most of the things in Leon and I's portfolio, and we haven't had this conversation, but I can pretty much say it in this. We've been investing together so long. If something in his portfolio dips hard, it's probably a buying opportunity. Because most of the things in his portfolio, he's researched the companies, the fundamentals of that particular stock are good, and he knows at some point they will come back. And his time horizon is going to be over 3 years, as will mine. And I have overweighted positions all throughout my portfolio. Leon and I have joked about it many a time on this. I'm like 20% position or 25% position in Tesla. It makes no sense to have that. But before me, I feel like Tesla's not going anywhere. You know, I got in when Tesla was at like $400 a share. And, you know, I can weather pretty much any storm. But Leon knows there was a point where the portfolio immediately went down with 18% because Tesla was 25% of it and Tesla was having a bad day. And, you know, I didn't know what to do. So, you know, but I did my research. I knew the money that I invested in Tesla was risk capital. I knew my time horizon was pretty long. So I doubled down when it dipped and I won pretty big when it came back up. And which means now it's like 35 or 40% of my portfolio, which again, makes no sense. But so, you know, it just depends on how you invest. And if you know when you went into it that you were in it for the long haul and it was a good company, normally dips won't hurt you or because really more mental than anything else. Like mentally, you just feel like it's just going to keep falling and you want to stop the emotional pain of it. But from a practical sense, most stocks that are good companies will recover at some point, especially when you have a time horizon beyond 5 years.
Yeah, and the point you just made was dead on. And kind of basically what I told Monteith was, it's whatever you're comfortable with, right? Like if you're comfortable with doubling down on the position, like you said, you double down on Tesla. Tesla was down 18%. Your account took a hit, but you were cool with it. You were like, you know what? I know what I'm getting into. You know, Tesla's not going anywhere. You're holding it for 3, 5, 10 years, whatever.
10.
You double down.
10.
10 plus. Yeah. So that's why I was telling him, and you know, we'll say to everybody else, there's no right answer to how to fix the position, right? It's whatever you're comfortable with. If you want to double down on it, as Brent did with Tesla, great. If you want to cut some of your losses, you want to, you know, cut some of the position now to ease some of that pain of that loss that's dropping, perfectly fine. If you want to sell the whole position, perfectly fine. It's whatever you're comfortable with. So there's no right answer to answer the question on how do you fix a position. But I will say, and you know, I've said this many times before, and I'll say it again. When you're getting into a position, as Brent said, know the company you won, but also know also know the amount you're putting into the stock relative to your account size. If you have a $10,000 account and you put $3,000 into one stock, that's 30% of your portfolio in one stock. If that stock takes a hit like Tesla did, was down 18-20%, your account's going to feel it. Like that's going to be some pain you got to live through. And so the way to kind of avoid this situation is when you're getting into a trade to limit the size of your trade. Like, so I said this before, my strategy is any one stock that I get into is no larger than 10% of my account balance. It's typically between 5 and 10%. I probably average about 6 or 7% per position. So that way, I mean, like right now, my biggest loser, we said this the other day on the live we did about our losing stocks. My biggest loser is C3.ai. I'm down like 50+% in that stock. Barely nosed it, right? Because that stock is I think it's only 6 or 7% of my account balance. Of that position is only 6% of my account balance. So it being down 50%, I barely noticed it. And that's throughout my entire portfolio. Most of my portfolio, the individual stocks, no one stock is more than 10% of my account balance. So the way to avoid the situation that our member was voicing is to make sure when you're getting into a position prior to getting in, make sure you again, do your research, it's stock you want to hold for the long term, but then size down your position. Make sure that position isn't outsized relative to your account balance. And like I said, I use 5 to 10%. Brent is a lot bigger. As he said, one stock of his is 35%. That's comfortable for him. 5 to 10% is comfortable for me.
And that's not normal. Let me be very clear. That's not normal. That's because it is Tesla. I feel like I know where technology's headed. And
but the difference is it's comfortable for you.
Yeah, but it wasn't. I'm saying, right. I just want people to know. Normally, it would not be. I'm not.
Oh yeah, right. It's only because it's Tesla, right?
Yeah, I'm not holding 20 to 30% positions in any company because also too, I own AI.3 and
C3.ai.
C3.ai. Ticker symbol is AI, right?
Yeah.
And so I was just gonna say AI, make it easy. I'm still getting medication on my system, but when it went down, I think it's less than 2% of my overall portfolio position because when I first got it, it was speculative. So when I know there is a stock that is a speculative stock, meaning you don't know what it's going to do. You speculate that it's going to do well, but you really don't know. It doesn't have the history to even go back and do historical research. You just have to base it off what the company's done thus far, management. You can look at financials, but even financials are skewed in the beginning. But because of those things, it didn't make sense to go big. And I actually liked the company, but I wouldn't go big with it because fundamentally it just didn't make sense. So it's less than 2% of my portfolio. And I didn't feel it either. And I held it. It's down like 58%. And
remember, we both bought more as it dropped.
Yeah, I bought some more too. Yep.
Yeah, we both. Yep, we doubled down because again, we're holding for the long term. We believe in the company. Will it come back? We have no idea. But we're sized to the point where it's not going to hurt our portfolio. If C3.ai goes to zero, so be it. It will not affect our accounts that much. We'll just move on. So Brent, if you can throw up that slide. So what I want to show here now is the consequences of being down in positions big, right? So what this is going to show is how hard it is. I mean, again, losses or drawdowns and losses are part of investing, right? We're all not going to win on every position. But you don't want to get down big in a position because you'll see this in a minute. So what this slide up here is showing, on the left-hand side, it's showing percentage loss of trading capital. So it's just showing the percentage loss. On the right-hand side, it's showing the percentage gain needed to recover that loss, right? So at a 10% loss, you need to regain 11% of your you need to have 11% gain to regain that 10% loss. At a 20% loss, you then have to regain 25% to come back to break even. 30% loss, you need to gain 42.85% to break even. So what this is showing you, and at 50%, you got to come back 100% to break even. So what this is showing you is that one, like we said before, when you're getting into a position, don't make it too big. And if it is too big, so the problem is twofold. If you get into a position that's really, really big and it's hurting your account, what this slide here is showing you that if you're down 40% on a trade that's pummeling your account, you have to come back. That trade has to then come back by 66% for you to just break even. You're a 40% loss on this huge position that you're in. You now need that position to come back 66% just to break even. So this chart is really good. And take a screenshot of it, maybe save it, or what have you. It's going to be on a platform. We're going to have the image posted. But what this shows you is that losses that can get out of hand are really, really hard to recover. I mean, look at 70% loss. You need a 233% gain on that position just to come back to break even. 80% loss, 400% gain to break even. I was down 50% once, and before the ticker symbol was MED, I ended up cashing out at over close to 100% gain on that. But I was down 50%. It came back 100%. I broke even, and then it went on to I went on to get a pretty good gain out of that. But that's rare, right? I mean, I've had positions where I've been down 30-40%, and they just have languished down there for a while. I either just held on to it for the long term and see if it would come back, or I sold it. But again, what this is showing you is that you do not want to get into big holes, because when you do, it's very, very hard to dig out of those. Because again, 50% loss, you need 100% gain. 60% loss, you need 150% gain just to break even.
Yeah, and also when we're looking at, when you're looking at just accounts in general, if you, again, when we say know your positions, that's one thing, and we say know the company, it's another. You should also have an idea of the stop loss that you're willing to take on any trade. And for those of you all who aren't familiar with what a stop loss is, it's a place where you say, I'm going into AI and I'm buying it at $20. If this thing goes to $7, I'm selling out, regardless of what happens. And again, it's a risk. It's always a risk with investing, because if you say I'm getting out, if it drops to $7, that means that you're going to accept that loss. It's not always a bad thing. And let me tell you why it's not always a bad thing. If you have a company that's down 20, 30, 40%, maybe that's one position in your portfolio. Maybe your portfolio is performing at like over 140% rate of return, and you're trying to capture loss to offset taxes. This is where it becomes more important to have a community or know people who are savvy about investing, because a loss doesn't always mean that you're losing money. Sometimes it means that you can offset gains if you know how to properly capture losses. And again, shout out to Attorney Beverly Winstead. She is a tax attorney in the Maryland area. She knows this very well before her clients, when her clients come in. She may see a loss on the records and think this is actually great because you did amazing in the real estate market. So let's go ahead and sell it while it's down to offset some of that real estate gain. So it's a lot to investing, and it's not always black and white.
Yep, definitely. So just recap 2 things. First, when you're looking to buy a stock, take a measure of how much you want to invest in that stock relative to your account size. If you're $10,000 account, going all in at one stock at 30, 40% or $3,000 or $4,000 probably isn't a good idea, because that stock, takes a hit. You're going to really feel it in your account. And then the other side of that is, if you go too big and then you're also down big, like say you're down 40% in that position, you then need that stock to recover by 66% just to break even. So this is why it comes back to doing your research. And again, even doing your research, we still don't know if that's, if the stock is going to do well or not, right? C3.ai, as Brent said earlier, we both of us believe in the company. We believe in its future. We did our research. It's down 50%. Why is that? Tech stocks are down, interest rates are rising, whatever. We don't really know why. It's just down 50%. But again, we were sized enough relative to our portfolio that we could absorb the loss, and we're both of us just going to ride it out till it either comes back, breaks even, or we get a profit in it. So yeah, just be aware of how much you're putting into a position before you get in, and don't go too big.
Yeah. And so everybody who has become a new member of Investment Education Academy, welcome. For those of you all who recently thought, you know what, I would like to become part of this community they always talk about, you can go to www.ieanow.com or www.investing education academy is in the title, and become a member today. And we have a new portfolio Panther that just joined, and we're super excited about that. And the IEA Crypto Bulls is now live. So that's our cryptocurrency platform where we are unapologetically and aggressively, diving into the cryptocurrency marketplace. Right now, we have been asked by a number of people not to advertise it too much, because they want to bring their people into the group before we start marketing. But I told a couple individuals that we would mention it today. We're not going to go full out into it. If you are interested in the cryptocurrency platform, again, we're not going to start advertising probably until next week because of request. But if you want to join, you can go to IEACryptoBulls.com. And again, IEA Crypto, CRYPTO Bulls, BULLS.com. This is probably about the most you're going to see us advertised. We're going to start offering it to the people inside of our community over the next 2-3 days before we go public with it. The first group, Leon and I, will be Leon and I's group. So we will be the head of that group. We are taking 25 to 30 members before we close the group. It's $200 a month. And as it stands right now, I think as of today, we had 2 people join today. 2 crypto bulls joined today, and I think we have 1 on a wait list and about 5 that said they're interested. So we're heading close to that 20 mark. So we'll have about 10 slots left by the weekend. Once those 10 slots are taken, it's closing this group, this cohort. We're going to be our cohorts, we're running cohorts. After this first cohort, which is $200 a month, the next cohort waiting list will begin. Once that waiting list gets to 5 people, we'll then open that second group, that second cohort, and that cohort will be at least $300 a month. So in this case, there is a penalty for waiting. So if you want to wait, kick the tires, feel free. We are making money right now. And for anybody who's, you're not really signed into this cryptocurrency space or the stock market, if you're holding cash position, you're losing. And I know normally we're very nice and we'll say things like that, but cash is the worst right now. Like I don't want to have cash anywhere. I want my money either in the stock market or crypto or real estate or something else. But having cash sit around because it's safe, it is not as safe as you think it is. And if you want to figure out what that means, listen to our podcast, go back through our episodes, and we absolutely explain it. For the new members who have joined, we're really excited to see this growth. And the IA Crypto Bulls, we already have 2 additional people who want to start a venture where they have their own groups as well. So this might be growing very fast, very quick. And we hope to see you on that side. And so we owe everyone 2 stock picks. Let me see. So I'm gonna go first. Is that cool, Lee?
Yeah.
All right. So my stock pick is Corvo. It's ticker symbol QRVO. Again, ticker symbol is QRVO. It's currently trading at $182 per share. Let me give you, it's a security company, but let me pull up the profile. The sector that it's in is technology, and the industry is the semiconductor industry. The company develops commercialized technologies of products of wireless community. You know what? I'm not gonna read all that. The company provides security for wireless platforms. And as you all know, number one, wireless is huge. And 2, being able to provide security for these platforms is absolutely essential as we go into deeper, because we're already there, as we go deeper into this communications age. For anybody who's wondering, how do you know which company to pick? Sometimes you don't. This company has a $20 billion market cap, which is definitely a market cap that gives them the ability to do research and development, scale, and to pay for hiccups as they come along. When you look at companies that have smaller market caps, somewhere like 230 million or 50 million, those companies can disappear overnight. So for me, I really like looking at companies that have a market cap of at least a billion. A billion is small too. But this company has been consistently growing. They had their dips just like everybody else. I am getting fatigued, so I'm going to stop now. If you can hear my voice, it's hard to talk. So Leon, I'll let you do your pick.
All right, so my pick is CGen. Ticker symbol is SGEN. So I'm just going to read what they do. So CGen is a biotechnology company focused on developing antibody-based therapies for treatment of cancer. They're industry leader in antibody drug, this is a medical term, conjugates, I guess. So it's a technology designed to harness the targeting ability to deliver cell-killing agents directly to cancer cells while sparing non-cancer cells, and thus reduce many of the toxic effects of traditional chemotherapy. So basically, it's a company that develops drugs that target cancer cells specifically and try not to hurt all the cells around it. So when I read this, it actually kind of reminded me of the not that the same thing, but Pfizer and Moderna's mRNA vaccines, where they're targeting just the spike protein on the coronavirus virus versus just attacking the body itself. So CGen, their drugs are developed to attack cancer cells specifically and not harm the surrounding cells. So a little bit of their financials. So over the last 3 years, they've been growing revenues at 70% on average per year, and been growing profits on average 197% over the last 3 years. So, this shows tremendous growth. Now, I will say biotechs are typically, volatile stocks. So if you're interested in this one, I think it's really promising, really good, but just be prepared for a little bit of volatility. And right now it's off 32% from its most recent high, which was back in October of last year. October of last year was its high around $200. and today it closed at 135. So it's down 32%. So, I love pullback. I love when stocks pull back. So this one fits right into my wheelhouse. So it's CGen, ticker symbol SGEN.
Yeah. So again, for everybody who has recently, we had a lot of new members join Invest in Education Academy. Welcome. Thank you for believing in us. For those of you all who have become IEA crypto bulls, it's exciting. I mean, we've already identified some free places to get free cryptocurrencies. We've been able to share links to help each other mine for cryptocurrencies. And so, I mean, it's a lot of great things happening inside that ecosystem. I think, and this is, again, another thing we normally don't do, but today alone, I want to say my portfolio increased about 79%. So, I mean, that was like, I think it was more than that, but today alone, to the point where my wife said, I don't even understand how we're making this much money. So I was like, you know what, that's a beautiful problem to have.
Right.
So if you're interested in joining the platform, it is not led solely by Leon and I, it's our group, but it's mastermind style. Everybody's sharing, everybody's giving the resources they know about. And this cryptocurrency thing is very new. And people, I mean, really you're pioneers if you're in this space right now. And it's a lot of people watching because they don't trust it and they don't know about it. You need to join a community. And this is something that's very consistent with what we say. Whether it's Leon or I, or another organization, please just get with the community that makes sense for you, because this ship is taking off and you're either on it or you're not. So I hope you're on it.
Big time. Taking off big time.
Yeah. So how much was your portfolio up today? Do you know?
I mean, over the last 2 days, I mean, Ethereum is up like, I don't know, 20-30% over the last day and a half. So, I mean, yeah, I would say I'm probably, just in my cryptocurrency portfolio, over the last 3 days, close to 40%, 30-40% in 3 days.
Dude,
I mean,
that classic, Ethereum classic.
Yeah, Ethereum classic, I think today was up, what, 60%?
16.
No, 60.
Oh, I was like, oh,
yeah.
It was like 60% by itself. Like,
yeah,
it was
by
like,
itself, right? Yeah.
Today it's been some incredible stuff. I really hope y'all join. Like, this is just me talking to y'all. I hope y'all join, because where this is headed, next year, I don't want next year to come and everybody's like, oh, I didn't know you all was serious, or I didn't really think it was going to be that successful. It will be. So,
no, it is.
Yeah. So everybody, thank you for being with us. Again, thank you for all of the warm wishes, the gifts, the food, everything else, text, phone calls. Every single one of those pieces of contact have been appreciated. Thanks a lot.